All right, good evening, everybody. It is Thursday, November 17th, 2022. It is 8:42 p.m. And tonight, we are going to be talking about a couple things. Now, I quickly wanted to review, and we'll do that on the stream tonight, both the CPI numbers that we got in the United States and also the PPI, which is the Federal Reserve's preferred metric for inflation. So we're going to review inflationary pressures in the United States, but we are also going to be taking a macro view. Okay, we always talk about global macro, so we are going to be taking a macro approach and looking at some of the inflation data coming out of the United Kingdom or the UK, okay? Because as we talk about monetary policy, I've noticed that we tend to only focus on the Federal Reserve, which is the central bank here in the United States. But also, I think it's important to zoom out and talk about the ECB or the European Central Bank, and also the Bank of England and all the central banks around the world to understand the monetary environment globally, okay? Globally, not just in the United States. Because once we understand what environment we're operating in as it relates to global monetary policy, we can understand where corporate earnings are going to go, where markets are going to go, and also we'll be able to understand the liquidity in the environment, okay? So is liquidity going to contract? Is liquidity going to remain healthy and expand? We'll talk about that tonight. Also, a cybersecurity company that we talk about all the time on this podcast, Palo Alto Networks, ticker symbol PANW, beat analyst expectations on both the top and the bottom line, beating on EPS, coming in at about 83 cents. Analysts were expecting 69 cents of EPS. Revenue also rose 25% to $1.6 billion. And they had extreme success in what we call the enterprise segment or the strategic. We'll talk about that. And then we will finish off the live stream with reviewing some housing data we've got and talk about the big piece of data we're getting tomorrow, which is the National Association of Realtors as they release their existing home sales. Okay, so that is the agenda for tonight. Let's take a quick peek at futures. Ticker symbol ES for the S&P 500. We are up about 3 points, so I would say about flat to 3,958. Let's take a look at the NQs. The NASDAQ 100 futures contract. We are also up about 25 points to 11,734. And then the YM, which is the Dow Jones Industrial Average futures contract, we are down about 16 points, trading at 33,568. So allow me a minute to close down my laptop and we will say hello to everybody in the chat and we will get this stream started. So give me a minute. It's going to be a really cold one too. So hopefully you guys brought your hat and gloves because it is going to be freezing. But the good news is we're starting off in the WeWork office. Here's a little view. I'll show you guys the kitchen. This is the kitchen area. Sort of like the little lobby. But we are going to head out these doors, down to the street level, and then we will get started on the live stream. We're gonna enter the elevator, so I'll say hello to everybody in the chat once we get down. But it's a lot to talk about, a lot to talk about. We had all-time record highs for inflation as it relates to the UK, the United Kingdom. So we're gonna talk about what that means for monetary policy going forward. We're gonna talk about cybersecurity, big tailwinds there. Wayne McKay, what's up, my friend? Look at that, man. It's freezing out, my God. All right, so we are finally on ground level. We are on the corner of East 32nd Street, Madison Avenue. At least it doesn't appear to be too windy out tonight, but it is cold nonetheless. So let me scroll to the top and say hello to all my friends. The ABX girl is here. Good to see you. RJ, this is Olaf from Colorado. Vinny Castellano. NJB says howdy. Vonda Howard, the British Grey Brandy is here. Good to see you. Zenardo says, hey, Tom. William Brooklyn, what's up, man? Good to see you. Dr. Longest. Teresa Diaz. Carson is here. What's up, Carson? Roy S. Mr. H. Sparks Carnival. Thank you for being here. Dodo Birds. Can we get a tour of the WeWork? I think I gave you guys a pretty nice little tour. Susan Wallen says, good evening from Michigan. Welcome to all of our friends in Michigan. NND 045, the one and only Patrick, New York. Good to see you, Patrick. Paul Medes is here. My good friend Millie Vanilli is here. Says, hey, everyone, make sure you get bros under 30. Interesting. MKS is here. Welcome. And John Miller. Good to see you. So everybody, tonight on the stream, I see Lee is here as well. Welcome, everybody. Ryan Royal, Neil Bell, Fairway. Dan Zank says, Tom, remember to stay warm. It's going to be really cold tonight. Yeah, I mean, before we get started on the topics, speaking of it being really, really cold, Dan Zhang and chat, did you guys see, supposedly in upstate New York near Buffalo, we're going to get, or they're going to get 70 inches of snow? Did anybody hear that? 70 inches of snow. And here's the kicker. Supposedly, all of that 70 inches is going to fall over a period of 48 hours. I mean, that's just ridiculous. I don't know how I could live with that. Hello Mate 2008 says, I am near Buffalo, and yes, we're going to get the snow. Wow. Well, good luck with that, my friend. Hopefully, it doesn't snow too bad. I don't think I could deal with that. That's just too much. The Great Invisible is here. Got your welcome, everybody. I quickly want to draw our attention to something that we've been referencing probably over the past 3 weeks on the stream. Now, if you take a look at the Chinese market, okay, the Chinese stock market as a whole, you can take a look at the HSI, which is the broader indice. Now, on my Twitter page, I posted something today. I posted a monthly chart of the HSI. And you'll notice almost every single time when we have these massive, exacerbated sell-offs in the Chinese market, we always have these neck snapper V-shaped recoveries in the individual stocks and the indice. So if you guys want to follow along, just check this out and keep it on your radar, okay? You can go to tradingview.com or any preferred charting software that you use and pull up the broader Chinese stock market, the HSI. And we had this massive liquidation event over the past 3 weeks as it relates to China. I mean, the Chinese names were getting killed. I remember we were covering it live on the streams. I think Dan Zhang was reading us out some ticker symbols, and these stocks were getting crushed down 10%, 15%, 20% in a day. And it seems as if a lot of that dust has now settled. And more specifically, if you've ever heard of something called a mean reversion trade, okay, reversion to the mean. Just real quick, this is 28th Street, I believe, or 29th Street. We're gonna head down to Madison Square Park down here. If you've ever heard of a mean reversion trade, usually when either major equity indices or individual stocks get grossly extended to either the upside or the downside from their major moving averages, you tend to have these ferocious snapback rallies or declines, depending on where the extension is, back to the moving averages. So if you put either a 50-day moving average or a 200-day moving average over the Chinese stock market, right, the HSI, you'll see that we were extended 37% to the downside, and we have now since rallied off the lows. Okay, this is from the low. In 2 weeks, we've rallied 27%. So just be cognizant of that. Alibaba was up big today. JD was up big, and also Pinduoduo, ticker symbol PDD, also had a really, really good day. So, are we potentially near the bottom, or is the bottom in for Chinese equities? That is the question. We'll talk about that maybe on Saturday. I have some interesting things planned for you guys. Zoe Ben is here, says, hey, good to see you. Sparks Carnival says, I think that is going to happen with Disney as well. So Disney stock. Yeah, Disney, Disney's down what? Like 12% after earnings. Google is here. What's up, Google? Good to see us. Good evening, everybody. Buy the Book says, hey, Tom, thank you for the walk and talk tonight. Thank you for being here. I appreciate it. Michael Joseph says they are recovering now. Dan Zhang says every time there's a sell-off in the Chinese market due to political news, the next few days recovery is amazing. Some of the best dip buying opportunities that I've seen. The ABX girl says, Tom, hubby went to University of Buffalo and there was no more than 1 foot of snow before Thanksgiving. That's not global warming. Harry Connor says, yeah, Buffalo has to get ready. Yeah, I mean, we'll see, right? Because here's something that we talk about too, and I think it's important. I don't really put too much credence on it or too much weight on it, which is just overall broader sentiment, right? And usually when you have crowdedness, right? So in the hedge fund industry trades, there's a terminology called crowdedness. So when everybody's looking at the same side of the equation, or the same side of the trade, usually the exact opposite happens. And it's not only in the financial markets, right? I mean, if you remember, before midterm elections, I think unanimously on the stream, and even in the mainstream financial channels too. I mean, you look at Fox News or CNN, they were all projecting a massive red wave. So when everybody is stacked on one side of the equation, for whatever reason or not, the exact opposite scenario usually tends to play out. And I think that's exactly what's been happening with the Chinese equities over the last 2 weeks. I mean, you look at any interview on CNBC, from, interviews with Andrew Ross Sorkin, having big portfolio managers come on the CNBC there, everybody's been bearish and people have been calling China, quote unquote, uninvestable. So this could be the start of a longer and broader major uptrend, or it could be the combination of two factors. Historical extension to the downside from those major moving averages and massive, massive short covering. So we'll see. Millie Vanilli says Vroom, ticker symbol VRM, looks interesting lately. Yeah, I'm not really interested in that, just to be very blunt. So Vroom is, they're probably going to go out of business. Now, a lot of those sort of companies, like Carvana is another one. A lot of the very high beta speculative tech stocks that be getting bombed, getting blasted, because essentially what happens is those companies are allowed to survive and thrive in an environment of massive liquidity and artificially suppressed interest rates. But the moment rates start to normalize, which they are starting to normalize now, those are the type of stocks that get killed. No earnings, very frothy, high valuations, no free cash flow. But it's interesting. The ABX girl says, Tom, your opinion on Twitter, 88% of the staff gone via layoff or quit by deadline today, and Twitter may be gone by this weekend. Offices are closed. So the ABX girl, I was seeing something that was trending on Twitter. That's like the death of Twitter, Twitter is dead. And I didn't look at it because I thought it was just going to be people complaining. But I don't know. I'm not too sure my opinions and thoughts on it. Here's what I'll say about the Twitter situation, to be honest. You have a lot of disgruntled workers, right? Regardless of if you agree with what Elon Musk is doing or not, at the end of the day, from my experience, and look, I'm a big Elon Musk fan, by the way, right? A huge Elon Musk fan. You guys know that. I'm obsessed with Tesla. I love the cars. But this is what I'll say. It seems as if the culture does not equal what Elon Musk wants to bring in. And what Elon Musk wants to bring in may be the better scenario, right? But the people who are there right now obviously don't like the way things are being run. I think we could all agree with that, right? You've had multiple reports of Twitter employees coming out and saying things are not good, we don't like the management style, because they're used to a culture that was already established under Jack Dorsey and then his predecessor. And Elon Musk is just a completely different mixed bag of tricks. So, in my opinion, if you want to have Twitter be successful, you got to essentially hire all new employees, because you're going to have extreme animosity. And in my experience, it could be the best job in the world. You could love what you do. But if you work for somebody who you're not very fond of, it's just game over. I've done it before too. I mean, I've had jobs where I loved the job. I love my coworkers. But just because the boss was, an a-hole, I can't swear on the stream, it ruins the whole thing and you lose all motivation to work for them. Now, maybe that's just me, but has anybody experienced the same thing? Like, you could love your coworkers, but if your direct manager, your boss, is terrible, it's sort of like all bets are off. Anybody else experience that? Quack 12 says employees at Tesla seem pretty happy. Yeah, so we're mainly focusing on Twitter, but I do agree with you. Warwalker says me, Dr. Longer says yes. Millie Vanilla says Twitter workers have to go from sandals to having to actually wear shoes. Zozo Bob, welcome. So here we are outside of Sony. And just by the way, let me know if we ever have wind noise in the microphone, because I don't have my mic still and it's really windy and nasty out tonight, so I apologize. Hey, Sunshine After Rain is here, good to see you. Sparks Carnival says there was a Harvard Business Review that found regardless of whatever managerial style of a supervisor, the most important factor was likability, or was being liked. 100%. Yeah, and it kills the whole morale of the organization. So what I'm trying to say, and I don't want to get this confused with what is the right management style, right? Because what has happened at Twitter over the past, 8 to 10 years may have been the wrong management style, right? But you have to understand, when you have a CEO coming in here and literally going scorched earth, those employees are not used to that style. So they're just either going to shut down completely or they're going to self-sabotage. So in my experience, you just have to do a whole rip and replace. Because if you're not motivated to work for your boss, it's just, you gotta sort of cut loose and do something else. Right here, beautiful One Vanderbilt building. Looks fantastic on the corner of East 24th Street. Ethan G says, can't wait for the snow to come. I could wait a little bit. I could wait a little bit longer. Vinny Castellano says, Tom, any ideas what I can do with my financial aid? It's a nice amount. So Vinny Castellano, you talking about financial aid for what? In what respect? For school? Joseph Hardaway says, how do you feel about retail versus e-commerce in this economic environment? Well, I think, so here's my take on that. And I think it's pretty appropriate to quickly touch on that, because Last night on the live stream, we talked about Target, number one, and number two, we talked about Walmart. Both players reporting earnings this week. Now, what was the major deciding factor? In my view, it was the expansion and growth of e-commerce, right? So Walmart is doing a really good job of growing their sales on the e-commerce side of the house. Also with their mobile order and pay, you could do your grocery shopping on the app and picking it up in stores. So I think it's absolutely critical and absolutely crucial. If you want to go back even further, and I think we talked about this before, you know, look at some of the major electronics dealerships or the dealers, the big box retailers back in the day. Anybody remember Circuit City? I'm sure all of you must remember Circuit City. So Circuit City, for those of you who are unfamiliar, was very similar to Best Buy. It was almost like the same thing, right? I think we could pretty much just say they were almost like the same thing. But there's one reason and one reason only why Best Buy is still around and Circuit City is not, and that is because Best Buy doubled down on e-commerce and Circuit City has not. So I think the future is e-commerce, and I think it's very hard to be successful with pure brick and mortar, unless you're like a QSR, right? Quick service restaurant, something like that. Hey, Sunset Blue, what's up? Good to see you. Yeah, Thiz Monsters says, Tom, Circuit City and Radio Shack are all gone. And you know what's interesting? You know what's so crazy? And this just puts things into perspective that if you do not adapt and if you are not a disruptor, you're going to be gone. You're going to die. Because does anybody know historically what was one of the biggest stock market winners in history? It was a company called the Tandy Corporation, later known as Radio Shack. And that was one of the the biggest winners in stock market history. I think up almost 2,000% in his lifetime, and now it doesn't even exist. Crazy. So we are now at the south side of Madison Square Park. We have a pretty beautiful view of the Empire State Building here. And this is one of the original Shake Shack burger places as well. But this is also one of my favorite buildings here. Hey, Otter Haven is here, welcome. Yeah, Grand Street once is Crazy Eddie. I think he's in jail, isn't he? Or did he serve jail time, Crazy Eddie? Ah, Kim Grant says, yes, Tom, the TRS-80. Chris, good to see you. So I really wanted just to cover something on the stream before we forget. And the reason why I want to cover inflation again, and I know what you're thinking, but Tom, we already covered CPI and PPI. I get it, but here's the reason why I think it's so critical right now. Let me give you guys a beautiful shot of the Empire State Building. So here's the reason why it's critical. And I sometimes catch myself on these live streams focusing too much on the United States. And obviously it's important to focus on the United States to some extent because we are the largest global economy and we are the biggest powerhouse. And usually as it relates to monetary policy, the Federal Reserve, which is our central bank, acts as a proxy to what other global central banks are going to do as it relates to their monetary policy. Okay? So let's quickly zoom out here and talk about the United Kingdom or the UK. So today we got inflation data out of the United Kingdom and inflation hit a 41-year high. Love this dog, by the way. Let's get a quick rating on the dog, 0 to 10. 10 out of 10. Beautiful, beautiful creature. But UK inflation hit a 41-year high of 11.1% as food and energy prices continued to soar. Now, this absolutely blew the doors off of economists' expectations. Now, the consensus on the street for UK inflation, the CPI, was 10.7%. We came in at 11.1%. So you might be asking yourself, well, why should I worry about this if I'm based in the United States? Well, if we think about the monetary environment, love is kind says 10. Big Talk says, Tom, can you help Ireland fix the rent prices here? More homeless hit an all-time high. Yeah, well, we're going to talk about that as it relates to inflation. And it's horrible because when we think about the broader stock market, right, what I like to think about and conceptualize is the following. So every major stock market has a PE, or a price to earnings ratio, price divided by earnings. Now, what are the main variables that drive either price or earnings? Well, on the stream, we always talk about the number one most important thing that we as investors or traders can try to do is to predict GDP, right? Because the majority of the time, oh, this is Italy, by the way. Let me give you guys a shot at Italy. The majority of the time, if GDP is going up or expanding, hey, Eric Byard, thank you so much for the $5 donation. You are way too kind. It says, greetings all, and thank you for streaming. Oh, I lost my father today. Oh my God, dude. That's man. Eric, well, hopefully you find peace with that. And I'm sure he lived a fantastic life, and I'm sure he was a great guy. And I'm really, really sorry for your loss. My condolences, my friend. But thank you for the support. I appreciate it, and hopefully you'll be able to find peace with what happened, and I'm sure he was a fantastic person. Sunset Blue, thank you so much for the $2 donation as well. I appreciate it. But so as it relates to price and earnings, we try to predict GDP because if we can predict that GDP is going to go up and the economy is going to do good, well, then that means corporate earnings should do well and go up in tandem with GDP, thus leading to higher prices across the major equity indices. Now, what drives price and what drives earnings? Well, price, let me give you guys another beautiful shot here at Madison Square Park. Well, the one thing that drives price more than anything, in my view, is liquidity, okay, in the economy. So when I talk about inflation and how it translates to liquidity, it relates back to central banking and central banks. So the reason why I brought up the fact that UK inflation hit a 41-year high today at 11.1%, well, what do we think the Bank of England is going to do the next time they have to make a monetary policy decision? Do we think they are going to pivot? 10 out of 10 on the plants right there. Do we think that the Bank of England is going to pivot and ease up on raising interest rates? And maybe they will start to pivot and start buying gilts? Or do we think they're going to be steadfast with raising interest rates and running off the balance sheet? So in an illiquid environment, which we are right now, as we compare it to 2020 and 2021, when central banks were printing like crazy, you saw price of assets skyrocket. So we are now in an environment where it's high inflation, and the one way that we control high inflation, or at least attempt to, is adjustments and changes in monetary policy. And who does that? That is the Federal Reserve here in the United States. It is the Bank of England, the ECB, and global central banks. So inflation is very, very critical to pay attention to, because that is essentially a leading indicator of monetary policy. So horrible news coming out of the UK. I'd be interested to hear from any of our viewers in the UK from a sort of like a first-hand basis of just sort of the inflationary environment there. Because if we read through some of the line items in the report, not good. Very troubling. Hey, Chris Beeman is joining us. Good evening, Tom and everybody. Hey, Chris. Good to see you. ATC is here. Welcome. Big Talk. British Gray. Stephanie Stanley says, Tom, just yesterday it was a warm August. New York City night, yeah. War Walker, good to see you. Ethan G. Jamie Massetti says, Tom, prices in the supermarket are extremely high. Wendy England says, I hear food prices are nuts. They are nuts here. Michael Joseph says, the UK says they are already in a recession. No, yeah, they are. That is correct. And I think it's going to be a very, very long and drawn out one too, Michael, in my view. Mima Flowers says, it seems every time I come here, I hear more and more bad news. Yikes. Yeah, I mean, we have to cover the inflationary events, unfortunately, but now let's roll down some line items here. Now, we know that inflation, or CPI, came in at 11.1%. Economists on the street were expecting 10.7%. But on a monthly basis, let's put this in further perspective. On a monthly basis, CPI increased 2%. That's on a monthly basis. Again, not per annum, but on a monthly basis. For some context here, and get this, that is the same amount of increase that the UK experienced in July of 2020 to July of 2021. So we are now at a time, another great dog here, we are now at a time when we have month-over-month inflation rates meeting or exceeding normal year-over-year inflation rates in the UK pre-pandemic. And that is a very, very scary thing. Hey, Emmanuel, so CPI doesn't take a lot of things inside. It is a much higher inflation rate. Yeah, that's true. You actually make a really good point. Now, I would say that's a big complaint of a lot of analysts and economists on the street, where if you did the CPI calculation based upon how we did it in the 1980s, the actual real inflation rate was probably much, much higher, which is very true. Now, here's my biggest concern, and let me know what you guys think. But my biggest concern as it relates to the UK is the cost of energy and housing. So the cost of housing and household services, including energy bills, rose by an all-time record high to 11.7% year over year and up 9.3% month over month. So again, household services, energy bills rose 11.7% year over year and 9.3% month over month. So CNBC had an economist on, and this is what he said to put it in perspective for just how difficult it is to run a household in the UK right now on a year-over-year basis. He said, so in October, households are paying on average 88.9% more for electricity and gas than they did last year. So think about that. How, and this is my biggest concern, because how can you run a household on a fixed budget or a fixed income when you have inflation, or when you're paying almost 100% more for electricity just to heat your house? Big problem. Eric Byer, thank you so much for the $2 donations. Thanks everybody for the thoughts. Not a problem, my friend. Hopefully you feel better. Yeah, NMB 045 says 88%. That's almost double. Yeah, it's wild. And this is why NMB 045, in my view. Oh, real quick, I want to show you guys this restaurant. It's actually a really, really nice restaurant here. Look at how unique it looks on the inside. It's almost like a waterfall effect at the bar. It looks very, very nice, doesn't it? Very, very nice here. Big talk says my electric bills are crazy. They just granted use €200 electricity. Wow. And here is a view of the Empire State Building. Mimi says, Tom, I did hear about that at the G20, but I don't want to get banned. So I can't really talk about that, unfortunately, because we will be demonetized and deplatformed. So to NMB 045's point, so now that we talked about UK inflation, right? We have some of the hottest inflation in the UK ever. But what was everybody just jumping up and down about earlier this week? The markets were all giddy. They were rallying off the back of a better than expected CPI and PPI report here in the United States. However, inflation is still going up in the United States, but just because it went up less than economists were expecting, what we saw is an environment where everybody on Wall Street was so pleased and so excited. But if you dig into the report, I actually thought it was very, very negative, because here's my view, and let me know what you guys think. Hey, FredX, what's up, my friend? Good to see you. Always a pleasure. So here's what I think, and here's my biggest concern. So we got the CPI number out, right? It came in lower than economists expected. Then we get the PPI number out. So the PPI rose 0.2% in October. That was also below the 0.4% estimate. So on a year-over-year basis, PPI rose 8% year-over-year, compared with the 8.4% year-over-year in September. So we are seeing slight deceleration. Here's my biggest gripe. When we do a deep dive into the CPI report, the most important things that matter to the average American actually went up. It didn't decline at all. And what I mean by that is food and energy and shelter costs. Okay, so shelter costs makes up about 33% of CPI in total. And we actually had acceleration in the CPI as it relates to shelter costs on a month-over-month basis and a year-over-year basis. So you're not seeing deceleration in the key categories in which that impacts Americans the most. But you won't really hear that on CNBC. You won't really hear that on Bloomberg and the Main Street financial channels, because they are all about the headline number. So for some context here, and I think this is going to be a really, really good resource for all of you, if you type !CPI in the chat, so !CPI in the chat, the Nightbot will drop a link to the Bureau of Labor Statistics CPI report. And if you scroll down about halfway through the page, you will see all of the specific categories where you can go line item by line item and see what food, what energy went up, shelter costs, used cars, new cars, all that good stuff, right? And it is very, very critical, guys. This is basic stuff. You need to be looking at the individual line items, because here's my thesis. The Federal Reserve is going to understand, and they're going to look at, oh, I think this is brand new. Does anybody remember this all used to be scaffolding? This actually looks pretty good. Michael Joseph says they leave these numbers out of the basket of goods and CPI because they are so volatile, and yet those goods and services is what most care about. Yeah, so the core CPI, Michael, is 100% correct. So core CPI excludes volatile food and energy. That is 100% correct. And it just so happens, in my view, right, and I don't want to speak for anybody else, but in my life, I spend the most amount of money out of my budget on, number one, shelter costs, right? So paying my rent or my mortgage, that's number one. And then number two, food. Americans have to eat, right? Americans have to have a place to stay. And then, well, not for me, but, you know, I don't have a car, but if you put gas in your tank, if you heat your home with heating oil, right? Those are the main three things that are most critical to the average everyday American, and those are the only three categories that are not in decline. So here's the thesis there, and here's what I think. What I think is the Federal Reserve, Fed Chairman Jerome Powell, is going to look at this, and they're not stupid, right? The Federal Reserve is not stupid. Fed Chair Jerome Powell is a smart guy, and he's going to look at the CPI report and understand, okay, prices may be declining and decelerating, but the most important categories are actually doing the polar opposite of what we want them to do, and they are accelerating, right? They are going up. So I think it was the largest increase in shelter costs since 1990. Okay, so the biggest month-over-month increase in shelter costs since 1990. All right, so that is not good news. So I think a lot of people, and again, this is my opinion, I think is going to get caught on the wrong side of the trade here. I don't think we're going to have a Fed pivot anytime soon. Thoughts on that? Hey, 3T3 is here. Says the Fed doesn't understand Jack. They'll flounder, then write a book, plus win a Nobel Peace Prize like Bernanke. Oh my God. Jeez, man. Harsh, but you said it, not me. Funny, hilarious. Hey, Marty Lewis is here. Hey, Marty, good to see you. Marty Lewis, any swimming tonight? Too cold for swimming, right? Too cold. Emmanuel says, will the Fed go burr again after 2025? I mean, I don't see it anytime soon. I don't see it anytime soon. Now, I understand that the inflation is decelerating, but again, the most critical categories are doing the opposite, so who knows? Sparks Carnival says, Tom, the U.S. Census Bureau reported consumers are eating and dining out more than ever at restaurants and bars. Is that about to come to an end? I don't think so, actually. And we sort of talked about this before, and we got a lot of really, really good data out of a lot of the major investment banks and the banks in general. This is Koreatown, by the way. Always has really good views of the Empire State Building, one of my favorite places in the city. So out of all the major credit card issuers, they're seeing the same exact thing. And I think that's just a pre-pandemic return to normalcy in a way. Because you had about 2 years of people's lives where they were locked down, ordering in, cooking food inside because they couldn't actually physically go out and eat places. So I think you're going to see that continue, right? I mean, it's a Thursday night here in New York City. Tons of people are out. People want to get out. People want to travel. And I think it's just people are going to do it regardless because they weren't able to do it for 2 years. I don't know. Thoughts on that? Hey, Mike C says household credit card debt is going up, up, and up. Mike C makes a good point. I think there was some data released from the Federal Reserve that shows that consumer credit card debt hit an all-time record high. I think that was this week, wasn't it? Anya says, how much is the average rent for a 2-bedroom in New York City? I don't know. For a 2-bedroom, I'm not sure, but I can tell you this. I think the average rent for a 1-bedroom in Manhattan, so on the island of Manhattan in the borough, I believe is $5,000 for a 1-bedroom, I believe. Which is crazy, by the way. Ethan G says you actually have to be careful about using credit cards. I agree, especially in this environment. Now, why is it unwise? Well, it's always unwise, but why is it unwise specifically right now to carry a balance on a credit card? This is a very good place, by the way. So Food Gallery 32 is sort of like a big food hall, like a big dining hall here in Koreatown. And my favorite place in Food Gallery 32 is actually on the 2nd floor. It's called Pelicana Chicken. It's fantastic. Highly, highly recommend it. It's one of my favorite places in Koreatown. Mac Jack says, hey Tom, I agree. People will spend on food and they will go out. Yeah, so the reason why it's unwise right now specifically is because interest rates are going up. And credit card rates are very, very sensitive to Fed funds rates. So as the Federal Reserve raises interest rates, And we are just coming off the back of the fourth consecutive 75 basis point rate hike for the Federal Reserve. Interest rates on credit cards are going to go up. So if you are carrying a balance on that card, your interest is going to rack up and compound at much, much faster rates than they previously were. Hey, Marty Lewis says there's a Pelicana chicken on 10th Avenue near 45th. Is there really? I didn't know that. You should try it for takeout. Highly, highly recommend it. It's really good. Now, I will say this, Marty Lewis, it is expensive. It is expensive. So like a once a month thing is fine, but it's pretty pricey. Pretty pricey. Lath says, hey Tom, I just found this live. I love the idea. It's so calming to have this on the side while you talk while I code. Hey, thank you so much. Appreciate it. You know, I've been getting a lot of emails like that saying, hey, I have you on while I'm coding or building discounted cash flow models. So thanks for joining. We appreciate it. What language are you coding in right now? What do we got? Mike sees his terrible story the other day about a car mowing down a sheriff in Southern California. I didn't hear about that, but that is horrible news. It's terrible. Zozo Bob, welcome. Good to see you. So I think moving right along here. So we covered inflation, right? We talked about inflation in the UK and in the United States, and how that impacts monetary policy. We talked about every stock market, right, has, if you look at the major equity indices, what I like to look at is the PE ratio and what drives the P in the PE. And so what drives price is liquidity. So if we are in an environment where central banks globally are reducing or sucking liquidity out of the market, well, prices are probably not going to appreciate. And that's exactly what we've seen over the last year. And what drives the E in PE is corporate earnings. And corporate earnings are driven by a growth in GDP. And that is why we look at those leading indicators in the economy to try to forecast GDP. But if we go to the individual stock level, everybody, we've been talking about this big secular trend. Before we get onto that, this is a very good Korean barbecue restaurant here in New York City. This is called Love Korean Barbecue. It is located right on the corner here of East 32nd Street and 5th Avenue. Now, even though this barbecue place is very, very good, there is an even better spot directly next door called Baekjung. It's fantastic. So if you're in the city, definitely go there. Definitely go there. But we've been talking about this big secular trend or theme, right? So whenever I'm trying to identify an individual stock level investment thesis, I try to start from the top down, so a macro approach, and then hammer down to industry level. And I am very, very bullish on cybersecurity in general. So if you've been watching the stream for probably about a year, in my view, based upon the clients that I work with, the products that I've sold in my software sales, tech sales career, I think Palo Alto Networks is by far the leader in cybersecurity. Hey, this is Tom. I visited New York City for the first time 2 weeks ago. I'm from Toronto, Canada, and fell in love with it. Would love to move there for a couple of years just to experience it. Dude, we'd love to have you. You got to come to New York. I think it'd be a great experience for you. Another great view of the Empire State Building right here on the corner of 5th and 33rd. Joe Driver says, hey, Tom and team, I see FTX has finally filed for bankruptcy. Any thoughts? Well, I think they filed for bankruptcy last week, didn't they? Now, for those of you who don't know, FTX is what, well, at the time, not anymore, was one of the largest cryptocurrency exchanges led by Sam Bankman-Fried, And it turns out the entire thing was a big fraud, because Sam Bankman-Fried and his team was using customer deposits to speculate in the marketplace, which is a huge no-no. I mean, that is some of the most egregious fraud you could ever do. And, you know, in general, I've said this before. Really quick, this is the Starbucks, brand new Starbucks Reserve store. I think there's another one down near Chelsea Piers, or Chelsea Market, excuse me. Anytime, and I've said this probably 1,000 times, anytime where you have an alternative or altcoin, I would really highly advise you stay away from it. Because in my view, these are all unlicensed and unregulated securities. So FTX had their own crypto token called FTX. And the same thing with Binance. Now, Binance has their own token as well, BNB token. And the problem with that is it's sort of like you're minting your own fiat currency to fund your operations. And when people lose faith in your token, well, you have a bank run, and then just like all fiat currencies go to zero, then you have a steep implosion. So I would really stay away from all that stuff. But this is going to be, I think as of now, the size and scope of the fraud was bigger than Enron. I think. So far, I think it's bigger than Enron. So this is the inside of the Reserve Roastery here. Dr. Longus says, Tom, you were right about the scam cryptocurrency. Yeah, I mean, because I've been through a lot of these cycles, right? I've been through a lot of these cycles, and when I was in college, I learned the hard way on a lot of these crypto tokens, right? Since 2015, I mean, my God, Bitcoin in 2015 was what? $600. So I've been through a lot of these cycles. I know it. But yeah, I think there's a big distinction between Bitcoin and all this other nonsense. I think a lot of these alternative cryptos are hijacking the validity of Bitcoin. If that makes sense. Hey, photos from around New York. What's up, man? Good to see you. Edward Adams says, which in my opinion does not bode well for the legitimacy of cryptocurrency. Just saying. Yeah, well, I think everybody sort of knows my thoughts on the whole thing. The alternative coins, there's like thousands of them. If you go to coinmarketcap.com, there's thousands of these crypto tokens, which all of them are pretty much a fraud, right? But again, the value that I see in Bitcoin is a self-custody, unconfiscatable wealth model. Doesn't matter if it goes up or down in price. Where I personally see value in it, doesn't mean that you guys have to see value in it, is if you can have 2% of your net worth in something that is truly unconfiscatable, I personally see value in that, right? But the problem is the one core concept, or the only thing that gives it value, in my view, people violate automatically because they're leaving this stuff on the exchanges. Okay, so if you leave something on an exchange, you are then trusting that exchange to custody your asset, which negates the only use case for the asset, if that makes sense. You want to have your own private keys. But anyway, we've sort of beat the dead horse like crazy on that one. So anyway, everybody, big trend here that I think is going to continue for some time, which is cybersecurity. So we're coming up on Macy's, Herald Square, 34th Street. Beautiful. They already decorated Macy's with all the Christmas lights. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days per week between New York City and Miami. And we start at 8:30 p.m. Eastern. London says, if you don't hold it, you don't own it. Crypto as well as gold and silver. I agree. I think that's a very good saying, my friend. Hey, Rafet is here. This is Tom. I still have real Bitcoin. Not sure if I could exchange it. I bought it in 2015. Well, it looks like you made a pretty good return. That's some serious alpha there, my friend. Congratulations on that. Yeah, Billy says Palo Alto Networks had a good report. They did. And so I think this bodes well for two other cybersecurity companies that I cover. Okay, so I cover Palo Alto Networks, I cover Zscaler, and I cover CrowdStrike. So Palo Alto Networks beat on both the top and the bottom line after hours today. I think the stock is up 7%. However, I think, yikes. I think in 7 days, could anybody fact check me on this? I think in 7 days, Zscaler, ticker symbol ZS, and CrowdStrike, ticker symbol CRWD, will also report their quarterly earnings. I think it's either 7 days or it's in 2 weeks, I forget. But in my view, I think Palo Alto Networks is the undoubtable leader in cybersecurity because they have very, very good zero trust architecture, which we covered in our cybersecurity architecture stream. Design Ideas, thank you so much for the $5 donation, my friend. It says, hey Tom, looks like we're on target to see 36,000 Dow Jones by Christmas week 2022 for the stock market. What do you think? Well, here's some key levels. So I'll throw some key levels at you. I was going to give you guys these later in the stream, but I'll give them to you now. Notice where, if you look at S&P 500 E-mini futures right now, ticker symbol ES, we are just trading right below the 200-day moving average. All right. The Dow Jones Industrial Average, or the Dow 30, is already above its 200-day. And the NASDAQ 100, ticker symbol NQ, we're looking at the futures, right? We're not looking at cash, we're gonna look at futures. We just broke above the 50-day, and we are headed towards the 200-day. Historically, that is when bear market rallies conclude. So if you look at the S&P 500, where it rallied from in the summer, we ended that rally in late August, right at the 200-day. And I think going into the end of the year with tax loss selling, that could drive some of these individual stocks like the tech stocks that have been getting pounded further into the ground. But what you usually have towards the last couple weeks of the year is something called window dressing, where a lot of these funds, mutual funds, whatever you want to call them, that are down, that are down quite big for the year, you tend to see something like a Santa Claus rally. But I think we still may revisit the lows here. That's sort of my feeling. So here are the official Macy's windows. I think they just unveiled these today. If anybody remembers what these looked like last year, do you think it looks better or worse than last year, the windows? I think they did a pretty good job. Hey, Audra Henderson says Macy's always has cool windows. Yeah, I think they did a pretty good job. I think it's pretty cool. All right, that one or this one? What do we got? What do we think? Hey, Tony says, hi all, I'm new here in the chat. I'm a practicing physician here in the San Francisco Bay Area. And so not all the finance guy, but I still love watching the live streams and I'm in the learning process. Hey, Tony, thank you so much for watching, my friend. Any updates on San Francisco? Because when we talk about real estate specifically, it seems as if people can have very, very strong biases on two markets in general. Number one, New York, and number two, San Francisco. We hear all of the fear, we hear all of the craziness that San Francisco is in decline, but I think it would be better to hear from somebody who's actually living there and working there, such as you. But is everything that they say true about San Francisco, or is that just, you know, hyped up media nonsense? Genuinely asking, by the way, because I always like to get a first person opinion. Wow, these are really interesting. These are pretty good. Hey, Tammy Wells is here. Says hello from Texas. What's up, Tammy? Good to see you. Tony Cortez. What's up, Walks on Wall Street? Good to see you, Tony. Welcome. Nikki Jeffries is here. Good to see you, Nikki. Yeah, DJ says Buffalo, New York is under a state of emergency. Supposedly, there is going to be 70 inches of snow dropped on Buffalo, New York, if you can believe that. Insane. Julia M., good to see you. Welcome. Here, I'll stand back so you guys can see the front of the building. And then we'll quickly go over Palo Alto Networks report. We'll do a deep dive. Jamil says, Walks on Wall Street, good night. Beautiful live stream from Sao Paulo, Brazil. Good to see all of our Brazilian viewers. Thank you for being here. But if you guys want to connect on Twitter, usually during the day I'm posting. Hey, good to see you. How are you? Usually during the day I'm posting a lot of stuff as it relates to finance. You can follow us at Walks Wall Street on Twitter. All right, now I'll give you a view from this side. You know, now that I'm looking at these windows, I think it's better than last year. Because I'm trying to visualize what they did last year. I think I like this a little bit better because it's more classic. Hey, taxi cab, what's up, my friend? I know, taxi cab, I heard about that. Supposedly Twitter's not going to make it by the end of the weekend. If that happens, I'll have to build my own Twitter. We'll build our own Walks on Wall Street Twitter. Terrence says, hey Tom, I live in San Francisco as well. It is crazy expensive and crime and homelessness are getting worse every single day. I think though that the media does overhype it like in every big city. Thank you for that perspective. I appreciate it. Yeah, I like to call it sensationalizing it, right? They sort of do the same thing here in New York. And New York does have its problem with crime. I'm not going to deny that. It is a big issue. But I think we focus too much on complaining about it than solutions. If that makes sense. Wow. So just to quickly review Palo Alto Networks earnings report, I'll give you guys one of my favorite shots of the empire. Palo Alto Networks reported EPS and revenue that both beat Wall Street expectations. So if we're talking about an earnings per share basis, they reported 83 cents of EPS, beating analysts' expectations of 69 cents. Revenue on a year-over-year basis rose 25% to 1.6 billion. Analysts on Wall Street were expecting 1.5 billion. But here's where I was most excited about and most pleased with the report. And this is one of two things, okay? And if you've been watching the stream, you always know anytime we're talking about an enterprise software company or a SaaS company specifically, I always like to look at this particular metric, which is customers that are billing $100,000 per annum, right? Or in the enterprise space. Now, some larger companies actually will disclose their millionaire customers, which are customers that are paying the company $1 million per annum. And Palo Alto Networks now has 1,262 customers that are paying over $1 million in ARR, or annual recurring revenue per year. That is up from 1,025 the same quarter last year. So really, really great growth there. Really, really good growth. And the reason why I focus on that so much is because I'm in enterprise tech sales myself. And these sales cycles, as it relates to the enterprise space, tend to be very, very long. Okay, it could be an 8 to 24 month sales cycle. It could take a year to 2 years. And the vetting process is extremely, extremely thorough. You not only have to get buy-in from compliance, buy-in from IT, HR, the entire organization makes big, big decisions. And if organizations are deciding to go with your particular software over another, that is saying something, right? That's called, or what I like to call, product market fit and proof of concept. So Palo Alto Networks, undoubtedly, in my view, is the leader. They also guided very well, so forward guidance. They increased forward guidance, and their guidance came in above Wall Street expectations. They guided to about 77 cents of EPS on $1.65 billion in revenue for the next quarter. So, as expected, fantastic report from Palo Alto Networks. I think the stock is up 5% after hours. Hey, Logan Reese is here. Welcome, my friend. Good to see you. Vivian says, good evening, everybody. Good to see you, Vivian. We are now outside of Pennsylvania Station, 34th Street, 7th Avenue. Good to see you. All right, let's make our way uptown. But if you guys are interested in the topics we talk about on the live stream, today we talked about inflation, monetary policy, liquidity, and cybersecurity. We're going to talk about housing next. But if you like all the topics of conversation, feel free to scan the QR code on your screen and punch in your email. You will be signed up for our free financial newsletter where we write about the U.S. equity markets, emerging markets, fixed income, and the like. And we'd love to see you on there. Yeah, I did see that some mortgage rates did have a little bit of a drop today. And obviously that is because the 10-year U.S. Treasury yield has been under some pressure. Now, the 30-year fixed rate mortgage really, really tracks that 10-year U.S. Treasury. But still, the vast majority of mortgages that are being underwritten are still in the 7% range, which is more than 100% increase year over year. Rolando, welcome, good to see you. Vinny Castellanos says Maria's under the weather, but she sends her love. Well, please get well soon. Please, my friend. All right, let's head up near Radio City Music Hall. Joseph Hardaway says healthcare and tech are the best for the long term, in my opinion. Yeah, I think it just depends on the tech stock, because tech stocks are very, very rate sensitive. And in an interest rate environment, rising environment, I think it's going to be a little bit risky. Michael Joseph says, would be nice if my bank account increased 100% year over year. Yeah, mine too, my friend. Mine too. Hey, Golden's Dawn is here. Welcome. All right, so this is 7th Avenue and West 36th Street. We are gonna head uptown towards Bryant Park. But if you look all the way in the distance, you'll actually be able to see Times Square. Cork 12 says tech stocks don't do good in these type of environments historically. 100% correct. Now, my biggest concern moving forward is we are unwinding here. Oh, what is this place? This place looks new. Anybody been to this place? My biggest concern is that we've now had over a decade of a monetary environment that has been leaving interest rates artificially suppressed. Okay, so cheap debt has flooded Wall Street over the course of a decade. And also, not only that, to provide more liquidity for the market over the course, I would say, since the emergence of the great financial crisis. The Federal Reserve has been providing massive amounts of liquidity by expanding their balance sheet, by buying agency mortgage-backed securities and U.S. Treasuries. Now, we are now in the complete opposite environment, in which case the balance sheet is contracting, right? Or they're letting U.S. Treasuries roll off the balance sheet. And we are in the most aggressive interest rate hiking cycle since the 1980s. We're just coming off the back of the fourth consecutive 75 basis point rate hike. So what we talked about at the very, very beginning of the live stream, right? Remember what we talked about? We did a quick review and a recap of inflation. We talked about the CPI print and the PPI print because those are the main two metrics that the Federal Reserve uses to set monetary policy. And if we think about the two variables that impact PE, right, price earnings, what impacts price, or what has the most, I would say, effect on price of equities, is liquidity. And over the past 14 years, we've had ample amounts of liquidity. Now, what impacts earnings? Economic growth and GDP. Economic growth and GDP impacts the E in PE, and what impacts price, or the P in PE, is liquidity. Now, all of that is being turned on its head. So we're going from an environment of ample liquidity to illiquid environments. And we're going into an environment where GDP should decline or contract, which should lead to corporate earnings declines, which should lead to further stock market declines. And that's why it's important. And I know a lot of people, I get these emails where they say, hey, I only want to talk about the stock market. I only want to talk about what stocks are doing. But you need to understand the cost of money. And the cost of money is set by the debt market, the bond market. And that's why a lot of the times you'll always hear me talking about how the stock market is a mere derivative of the debt market. So the stock market derives its value from the debt market because the debt market sets the cost or the price of money. I quickly want to show you guys up here. Usually they have some really, really nice holiday decorations right on Broadway. I'm not sure they're up yet though. We'll check it out. Yeah, Mike MTL says credit card debt is very high. You're right. Con IM says, hey Tom, UK has been in a recession for 40 years. The solution is to create a Republic of England. Hey, Manu says, hello Tom from Chile. Good to see you. Thank you for joining us on this frigid night in Manhattan, but beautiful night. Hey, Walking New York City is nice info, man. Thank you for the knowledge. Thank you for being here. walking New York City. Thank you for being here. Check out the H&M building here. Now we're gonna walk close to the H&M building because I want to show you guys the NASDAQ, but I don't know if I could mentally, I don't know if I have the mental fortitude to weather Times Square tonight. Hey, Stephanie is here. Good to see you. Says hello, welcome. Nikki Jeffries, right back at you. Really quick fun fact. So in this building, 1411 Broadway, sits a company called Third Bridge. I'm not sure if anybody's familiar with them. And they compete with a company called GuidePoint. It's like a consultancy business. And I'm actually a member of GuidePoint. Let me cross here. So the bike lanes will tell you which way the bikers go, but it's a mixed bag of tricks here in New York. There's bikers whizzing everywhere. Oh, I think that guy was recording on that thing. That's gonna turn out so sick. So real quick segue. I used to do these videos on the skateboard and they turn out amazing. So hopefully that guy's gonna upload that video on YouTube because the city looks amazing on the back of his skateboard. Looks fantastic. CR, so we are mentally pulling for you. We'll take a mental note at Joe's Pizza, which is now in Wynwood, by the way. So Joe's Pizza, right here on Broadway, very famous. I think it's a tad bit, yeah, it's good. It's good. It's a good piece, good slice. Not the best, but it's good. They are now in Wynwood in Miami. If anybody's in Miami, Florida, you can actually go to Joe's right in Miami now, which is pretty cool because ever since I've been in Miami, here's my biggest critique. I have yet to have a good slice of pizza in Southern Florida. Seriously, I've been there for about a year now, and I have yet to have a good slice of pizza in Southern Florida. But anyway, Third Bridge competes with GuidePoint, and GuidePoint and Third Bridge, essentially what they do is, let's say they do a broad range of things, but I'll just give you an example. Let's say if a mutual fund manager, a hedge fund manager wants a little bit more industry insight onto the telecom industry, for example, they will find experts in the telecom industry and broker consultation calls to give a lot of these portfolio managers extra insight on the industry, if that makes sense. So sometimes I do consulting with GuidePoint as it relates to fixed wireless, SD-WAN, and CRM tools specifically. And I don't know why, but as of late, I've been getting a lot of consultations, which is pretty good. I think my rate is like $150 an hour too. Now, when I talked to my friend who worked at Third Bridge, he's like, you could be getting so much more. So I think I'm gonna try to negotiate my rate on that. Anyway, Ryan Beck says you need to go try Miami Slice. Dave Portnoy rated it an 8.4, which is a huge score. What is that? So the place is called Miami Slice? All right, I'll try it. Now, I've been to two pizza places, one in Brickell, one in downtown Miami. Both not really too good. But then again, that's coming from a person who is from the pizza capital of the world, right? I mean, Long Island, New York has the best pizza. So it's very, very difficult to beat that. Trax 102 says, are you going to be live streaming when it snows? Yeah, I mean, if it starts snowing, we'll be out venturing through the cold for sure. Pit 2 NYC, I'm not too sure what it was called. I'm not too sure. I think we're thinking about the wrong one. Who knows? Let's see here. Bottomless Coffee says, have you tried the old school hamburger place in Massapequa. Yeah, it's called All American. Very, very good place. Very good spot. Not too far away from me. Peter T says the Fed and the central banks control the market at this point. Yeah, that's been the topic for tonight's stream. You're 100% right, my friend. They definitely impact the liquidity, which drives the prices. Now, here is Salesforce, which is a major enterprise software company, under the ticker symbol CRM. Under the ticker symbol CRM. CEO is Mark Benioff, which I think he won CEO of the Year last year, I believe. And we are also outside of the Whole Foods. Now, we talked about Whole Foods last night. Obviously, they're owned by Amazon. Target and Walmart reported earnings this week. And we said, and we agreed unanimously as a group, that we think the person who's going to win in the supermarket sector is the person or the company who is going to perfect mobile order and pay and delivery. And as of now, in my view, I think Whole Foods has a lock on that, obviously, because they're owned by Amazon. Magna A, thank you so much for the $1 donation. Very, very kind of you. I appreciate it. Thank you for the support. Yeah, Gully Steez says Target lost $400 million due to theft. Yeah, we talked about that last night. It's pretty crazy. And I think the reason why we highlighted it, really quick, we're on the corner of 42nd Street and 6th Avenue. Now, here's the reason why we highlighted it, right? Now, if you remember last quarter, we did a deep dive into Rite Aid's earnings. And the CEO of Rite Aid came on the call and specifically called out markets such as New York City and San Francisco, where they're actually deciding to close down some stores because the shoplifting and the fraud is just so high, where it's making these markets unprofitable for the businesses. Now, Target did not disclose the specific markets where shoplifting is taking the biggest hit, but they did say the vast majority of the shoplifting impact has been from organized retail crime rings. So, really, really big pain point there. Deborah S. is here. Says Kroger installed gates and security guards. They are getting ready. Hey, Jimmy is here. Says Albertson Kroger situation. Well, I think the last I heard, the FTC may force Kroger's to sell off some of their business to a different subsidiary in order for that merger to go through. I'm not too sure if I agree with that, though. Gully Steve says, Tom, it's insane. Companies now have to factor in these losses due to policymakers' political correctness. You know, Gully Steve, we talked about this last night. I'll quickly make, you know what, guys, do you want to take one lap around Bryant Park, or should we head uptown? I'll let you guys decide. Now, while we're talking about that, I think it's a multifaceted issue. And I think it has to do with, number one, to your point, lackadaisical laws in relation to punishments for these crimes. But number two, I think undoubtedly, the vast majority of the middle class and the lower class are really, really hurting. Bryant Park. Leida, this is Bryant Park, so we're going to go to Bryant Park. Good to see you, Leida. Welcome. Yeah, hopefully it's not closed. We'll take one lap around the Winter Village, and then we'll head uptown. Because what did we talk about at the beginning of this live stream? Everybody on Wall Street this week wanted to jump up and down, sing a song and dance, because inflation, or the inflation number, the CPI number, has decelerated and came in below economists' expectations. Now, what we reviewed on tonight's live stream, if you type !CPI in the chat, once again, !CPI, it is so critical, guys. Like, this is basic stuff. Very, very critical to look at the individual line items of the CPI report. And the individual line items of that CPI report, the only things that matter, in my view, that truly impact the average life of the average American is number one, the cost of shelter. Number two, the cost of food. And number three, the cost of energy. And in this latest CPI report, we actually saw acceleration, not deceleration, across all of those main three categories. So even though in general, the overall inflation trend is decelerating, in my view, the only particular parts of the inflation report that matters, which is shelter costs, rose by the fastest percentage basis since 1990, right? I don't know about you guys. I mean, we said this before, but if the average American is struggling to pay rent, struggling to put food on their table, and struggling to heat and cool their homes, well, there should be a direct correlation between petty crimes and shoplifting, right? So I think that is one factor on top of the very lackadaisical policies soft on crime. But I think that explains the Target. I think that explains why Target and all of these other big box retailers are having such a problem with theft, in my view. All right, we are going to cross here outside of the College of Optometry. Ooh, I forgot to update you guys. So today, I actually spent the majority of my day working outside of the New York Public Library. Now, it was almost unbelievable because I didn't have any conference calls today. So I'm like, you know what? I'm going to work out of the New York Public Library because it's just so gorgeous in there. Now, I think Monday, Tuesday, and Wednesday, the New York Public Library is open to 8 o'clock at night. The remainder of the week, it is open to 6 o'clock, and Sundays it closes at 5. So if you're in the city, if you're in the vicinity, I would definitely suggest getting some work done in the New York Public Library. It's one of the most amazing architectural marvels in the city, in my view. Yeah, Michael Joseph says the library is amazing. It's like being in Europe. It's fantastic. It's awesome. Steven Schwartzman building. Steven Schwartzman is also a titan on Wall Street, made the vast majority of his money in leverage buyout deals, LBOs. He also has a book that just came out. Very good book. It's called What It Takes by Steven Schwartzman. So here we are at the Bryant Park Winter Village. It seems to be closed now, but let's take a look at the ice rink. I think we have to go up and around, I think. Give me a minute. Grand Street 1, good to see you. So I've said this multiple times before, but we do have a lot of newcomers in the audience. So if you go to the Steven Schwartzman building, if you go all the way to the right side of the building and to the front, it is going to be the New York Public Library Research Room. Okay, this is where they have all of the very, very rare and old books. So if you ever have time, go to the research library and check out the following book. Okay, this is one of the most rare books in finance. It is called Margin of Safety by Seth Klarman. And Seth Klarman is a value investor just like Warren Buffett. And he put out this book, Margin of Safety, but there was only 5,000 copies ever printed. So if you want to buy a physical copy of this book, it's going to cost you $3,000. But if you want to spend some time and read it for free, an original copy, it's right there in the New York Public Library. Vinny Castellano says, Tom, do you still like Zoom Info? I like Zoom Info as the company, but the company is very different than the stock. And we are in an environment of rising interest rates. And in interest rate rising environments, a lot of those very frothy tech companies, enterprise software companies do not do well because they suffer from PE contraction and multiple compression. And I think we're going to continue to be in that environment for some time unless interest rates start to decline, which I do not think they will. Hey, Western Mass Dave, good to see you, my friend. Hopefully you had a good Thursday. I can't believe it's already going to be Friday tomorrow. Check out this view of the Empire State Building from Bryant Park. Fantastic. Hopefully they never build a building right here. Hopefully these buildings own the air rights above it. Hey, Ed Potke is here. What's up, Ed? Ed is from Corning, New York. So, Ed, are you by chance going to get any of that snow? I think upstate New York is preparing for about 70 inches of snow, if you can believe that. Wild. I think in places like Buffalo, maybe Syracuse. You know, not to get too political, not to go down too much of a rabbit hole, but we are on the topic of Walmart paying that $3 billion fine. I think the biggest threat to national security in the United States is not cyber threats, it's not TikTok, it's not any of that other stuff, even though a lot of that stuff is a big threat. It is this opioid pandemic and it's the fentanyl. It is so critical that we as a country do something about it. Because in my view, it is a direct foreign attack on the United States. I think something like 100,000 people a year die in the US due to fentanyl. It's an absolute travesty and it ruins people's lives. And you got to do something about it. And the solution the politicians will say is, oh, you got to close the border. That's not a solution. And I'll tell you why. Because the reason why it's not a solution is because a very, very small box, okay, if you go to FedEx, if you go to UPS, you take one of the smallest boxes they have, enough fentanyl to kill everybody in the United States will fit in that box. So you can just toss that across the border, pass it through the fence. So that's not a good solution. just to say you got to close the borders, because it takes just such a small amount to kill Americans. But I'll cease there. No, I'm seeing a lot of comments about Democrats this, Democrats that. No, Republicans are just as liable, my friend. I think we're all equally responsible for the travesty of this crisis. Anyway, moving on. So we're gonna head uptown towards 57th Street Billionaires Row. We are crossing the Bank of America Tower. We also did cover Bank of America's earnings tonight. I mean, not tonight, this earnings season. So usually once earnings season kicks off, the financials are the first to report, which is a pretty good proxy for the remainder of earnings season, such as consumer staples, consumer discretionary, because we have a glimpse into all of the spending data, as well as the lending data. So I did want to talk about housing for a minute, because as everybody knows, on Sunday night we did the stock market a look ahead live stream. Whoa. We did the stock market a look ahead live stream, and we talked about on Friday. Friday is the day for housing. So tomorrow, the National Association of Realtors will be releasing their existing home sales data. Now, I think it is even going to come in below analysts' expectations, or economists' expectations, for a lack of a better term, because interest rates continue to push higher. Although today we did have a slight drop in that 30-year fixed rate mortgage because we have some pressure on that 10-year US Treasury, but transaction volume is grinding to a halt in the housing market, in both the existing market and new home sales. So it's going to be very, very critical. Tomorrow on the stream, we're going to be analyzing this data, and I have a feeling we are going to see the 9th straight month of deceleration. Now, question: do we have any realtors in the chat right now that could potentially provide more perspective? Because I'm not a realtor, right? But I think we do have many people in the chat who are, that maybe could provide some perspective. What you're seeing in the marketplace. Are a lot of your clients telling you that they want to hold off or wait to buy a home until rates fall? Sort of, what are you guys seeing in the market there? Hey, G Stully says, hey Tom, my wife is a realtor. She was lost several deals already due to the interest rate hikes. Wow. Ryan Beck says, realtors are too busy trying to tell everybody to do. I shouldn't be laughing at that. No, I mean, look, at times, so to Ryan's point, right? I think, I don't want to put words in his mouth, but there may be a conflict of interest there, right? Because, you know, the story goes, realtors will tell you to buy all the time, right? If rates are high, if rates are low, they'll just tell you to buy. If the housing market is ripping, they'll tell you to buy. If it's cratering, they'll tell you to buy, right? But generally speaking, over time, real estate does go up in America. But here's what I'll say. You can predict, in general terms, the trajectory of prices of homes, specifically in like the middle to lower income market, because of everything we just talked about today. Interest rates and the price of money. Okay, it's pretty obvious that when you have a 30-year fixed rate mortgage, this time last year at 3%, which means the cost of borrowing money over 30 years is 3%. Well, you can afford, technically, I'm using air quotes here, you can technically afford more home. So let's say if your budget was for $400,000, your $400,000 to $450,000 house, right? With a 20% down payment at a 30-year fixed at 3%, your monthly payment is roughly going to be what, $1,200, excluding the taxes and excluding the insurance. But we have now had over 100% move in rates. That's a massive move in the bond market. I mean, that's just a historic stuff. And the average 30-year fixed is 7%. So your monthly payment has nearly doubled, which means that is totally removed about 40% of all buyers. So in the housing market, we talked about liquidity, right? So I always like to give this analogy. If you think back to your finance 101 class in college, I want everybody to think back. Your professor is standing at the front of the room and he says, okay, everybody, I'm going to show you how to read a balance sheet. I'm going to show you how to read a balance sheet. And he says, the first order of business is to define the order of liquidity on the balance sheet, right? So if you look at a corporate balance sheet, it is in order of liquidity. So you'll see your cash and equivalents, your marketable securities. And then as you go further down the balance sheet, you'll see things like property, plant, and equipment. And essentially liquidity is just how fast you can transfer something to cash. So real estate, property, plant, and equipment, it has value, but it's harder to liquidate or turn that into liquid cash, right? Stocks, I could go on my Charles Schwab account and automatically liquidate $1 million worth of stock. I could do that tomorrow, right? Not saying that I have $1 million, I'm just giving you an example. So in the real estate market, it takes more time for price fluctuations to show up. Because what happens is people list their homes on the market. They're saying, what? But my brother Fred lives 2 blocks down and he sold his home for $600,000. Well, that means I could sell mine for $600,000. Well, what he doesn't realize is that Fred sold his home when interest rates were 3% and now they're at 7%. So it totally changes the market mechanics here. And once homes start to sit on the market for 3, 4, 5, 6 months, that is when you have your price cuts. And we're already starting to see it too, by the way. You know, I always get these emails from Zillow, both in Miami, Florida, Miami-Dade County, Broward, and Nassau, Suffolk, and in Manhattan. You know, $30,000 price decline, $20,000 price decline. And it all starts when you see sales transaction volume dry up. So tomorrow, I think it's going to be a very important day. National Association of Realtors will release their existing home sales data. But the good news is, if you are in the market for a home, I think next year, you're going to get some really good deals. Right? And how do we know that? Well, we know that if we listen to the live stream yesterday. Wow, this looks really beautiful here. Radio City Music Hall looks fantastic. Everything looks beautiful on Avenue of the Americas now. Everything's all lit up. But yesterday, we got home builder confidence data out. So home builder confidence declined to its lowest level in nearly 25 years. And if we look line item by line item on that report, one of the things that home builders said is they are increasingly having to give promotions to buyers to prevent them from reneging and backing out of their contracts and to close deals in general. And this can include paying down or buying down buyers' points, right? So let's say if you're going to get a 30-year fixed rate mortgage, sometimes it'll come with, 1 point or 2 points of the overall value of the loan. So home builders are actually offering to pay that for customers. So I think we're seeing this transition from a seller's market to a buyer's market, and the power is going back to the buyers. So it seems as if here outside of 1251 Avenue of the Americas, they are putting up the very famous red Christmas bulbs. And it's so funny because it seems like every year, it seems like we're live streaming this. I wonder where they store these. Wonder where they store these. Hey, Hemi Powers, it's Tom. I'm going to Airbnb a few tenants in my backyard. Ryan says, is that Fox News? Yeah, so right over here is it's called the News Corporation building, and News Corporation owns Fox News, the Wall Street Journal, Investors Business Daily, and Barron's. Hey Billy, this is real estate tip. If looking for a rental property, look at military base areas. Always have people buying and selling, and many times they have time constraints that can get you deals. That's a very good, very, very good piece of advice there. Now, I think with that also, if you're looking to buy maybe a rental property near military bases, they tend to be very, very good tenants, right? So people in the military generally tend to be very favorable tenants, because if they do something bad, right, and they misbehave, well, you can go tell their higher ups and they'll probably have severe, severe repercussions and ramifications. So it's a good point. Hey, Ryan, it's Tom. You are a wealth of information. Canada loves you. Thank you so much, Ryan. Speaking of Canada, I will be in Canada later in 2023. Very excited about that. As you all know, I wanted to make a trip to Canada in 2020, but COVID-19 prevented me from doing that. So I'm excited. I want to go to Canada. I want to get back there. Haven't been in a long, long time. A lot of people out for a Thursday night. Scrappy says, why would anyone want to live in New York City? Well, for me, especially when you're very, very young, let's say you're just starting out your career, you're just starting out your career on Wall Street, or just starting out your career in tech or tech sales, New York City is undoubtedly the place you sort of need to be, right? In order to build up your network, because your network is going to be the one thing that carries you throughout your entire life. And by far the smartest people, not only in the United States, but globally, are in New York, right? Now I have a place in Miami, but if I had to do it all over again, I would say that if you're young, you're just coming out of college, you gotta do the grind in New York to build your network, because it is a very, very competitive place and you're gonna meet a lot of cool people. Hemi Power 199, thank you so much for your $2 donation. This is pizza on me. I appreciate that. Thank you for the kindness. Thank you so much. Justin Hernandez says, hey Tom, it's so cold in New York City today, but I try to remind myself I will be back in Florida in 7 weeks. Same here, man. I just got back from Miami 2 days ago. So I'm just starting to adjust now to the temperature change, but it's not too bad. I mean, the thing for me that I can't stand is the wind, and it's not really too windy today. Hey, Beacon, New York is here. Access to culture. New York City has culture. The rest of America is too sleepy. Many would agree. Yeah, I mean, I'm not saying that. I mean, the rest of America is fantastic, but, you know, New York is just very, very unique. Hey, Out and About is here. So Out and About is our moderator here on the channel from Toronto, Canada. Good to see you. Ross the Black says, Tom, only thing I wouldn't like is the cold. Yeah, me too, man. I'm not a big fan of the cold. Part of the reason why I bought a place in Miami, Florida. But New York City is fantastic in the summer and in the fall and in the spring. It's amazing. Mike Skate TV, thank you for joining tonight. I appreciate it, Mike. Running at altitude says, Tom, can we see the MLB store? Sure, I'll give you a quick look. MLB store is right here. Aaron Frazier, good to see you. Welcome. Now, I think there was one other thing I wanted to quickly cover today. We went through a lot. I mean, man, what a packed stream. Oh yeah, I wanted to talk about the dollar. Let's talk about the Dixie for a minute here. You know, all of these guys are, what are they called? The rickshaws, something like that? Is the Rockettes here at Radio City now, or is that in a couple weeks? Christmas Spectacular starring the Rockettes. I'm not too sure when that starts. Maybe it starts soon, I'm assuming. Hey, the LT Prod, what's up, man? Good to see you. Happy Thursday. Rolando says, hey, Tom from Dallas, Texas. Love Dallas. So let's talk about the Dixie. All right, let's talk about the dollar. Now, the dollar has had a very, very hard fall, for lack of a better descriptive terminology. Real quick, this is Nürburger Berman. I actually have a buddy that works here, right outside of the UBS building. So the Dixie is all the way back to 106. Now, the reason why I decided to talk about it tonight is because we're sitting right at the 200-day moving average on the Dixie. We have sliced below the 50-day moving average, and now we're sitting right at the 200. So I think we're actually going to find support here and rally. And I think that would coincide with exactly where we are right now in the equity market. If we talk about the S&P 500, we have since rallied about 16%. So if you look at cash, okay, look at the cash market, we've rallied about 16%. Now futures, I'm not sure where we're trading at right now. We're probably trading flat. So give or take a couple percentage points. But we have rallied the historical bear market rally average, which is right around 16 to 18%. And the dollar is now catching a bid right at the 200-day. We just so happen to be rallying into a declining 200-day in the stock market. If we get a big bid in the dollar and we get a sell-off in the bond market, I think you're going to see the stock market roll over here potentially, right? And the reason why I like to look at these three things specifically, so what I'll look at is I'll look at the major equity indices like the S&P 500, the NASDAQ or the Dow Jones Industrial Average, but then I'll also look at the Dixie, which is the dollar index, which measures the relative strength of the dollar against a basket of currencies. And then I have the 10-year US Treasury yield up. Now, generally speaking, not all the time. Oh, you got to be kidding me. They're putting up more scaffolding here? Guys, check this out. So this is the Charles Schwab building. And there's probably going to be scaffolding all the way to the roof here. I wonder how long that's going to last. So sorry to get sidetracked, but man, that's going to be so obnoxious having that scaffolding there. It is selling off and the dollar is rallying. That's usually negative for stocks. Okay, so first, everybody knows the relationship between the price of bonds and yields, right? So as bonds are getting bid up or as bond prices are going up, yields go down. And as bond prices sell off, yields go up. That's why I always talk about how I'm very nervous about an uncontrolled sell-off in the debt market. That's when yields spike, and then you'll see funds roll out of the stock market, usually flight to safety in the dollar or commodities or things like that. So I think we're at a very interesting point in the market where this bear market rally may be getting a little bit long in the tooth. So I wouldn't be surprised if we see at least some sort of a pullback or a correction, assuming we get a bid in the dollar. Again, we're trading at 106 right at that 200-day. And if we start to see that 10-year US Treasury make its way back up near 4%. So keep an eye on that. Yeah, 3 TTs is scaffolding stocks. I wish. Yeah, Marty Lewis, you're right. The Schwab headquarters is the CBS headquarters. Now, this building is the Alliance Bernstein building, but there's also a very notable hedge fund in here called Fortress Investments. And in this building where Fortress Investments sits, that is Michael Novogratz, which I think he got himself into a little bit of hot water when he was trading the Terra Luna nonsense. But he used to be a managing director at Goldman Sachs, and then I think he was a partner, a PM at right here at Fortress. yeah, Ralph is like Enron. Yeah, supposedly FTX as of right now should be larger than Enron, a bigger fraud than Enron. Oh, team, we got to take a little bit of an intermission here. Give me 2 seconds. But if you're enjoying the live stream so far, feel free to leave a like on the video. Hit the subscribe button if you're new, and if you want to sign up for our free investing newsletter, where we cover U.S. equity markets, emerging markets, and real estate, fixed income, please scan the QR code and punch in your email. You'll receive that absolutely free. I just have to punch in my external battery pack, or else the phone is going to die. So give me 3 minutes here. Allow me a minute. All right, team, we are ready to rock and roll. So here's something interesting that you guys will notice as we make our way into the deep, dark depths of winter. You'll notice that the battery is going to die a lot sooner. So we have to bring the external battery pack. What could we do? Could we get a quick time check in the chat? I just want to make sure I'm not venturing too far uptown. We may have to cross over.
And I was just kind of like, and then so like there was still a whole bunch of litigation associated.
I know, out and about. We did just get it, I think, 2 months ago? Ooh, 10:40, guys. So here's what we're gonna do. Because, oh my gosh, we've been streaming for almost 2 hours already. Crazy. Let's head over to 5th Avenue, and we're gonna start to make our way downtown back towards the Moynihan train station. And maybe if they still have Rockefeller Center open, we'll just take a quick lap around there. Yeah, War Walker, so true, my friend. War Walker, you making your way over to New York anytime soon? I know War Walker usually makes his annual trip sooner rather than later. Yeah, Tony's his fast few 2 hours for sure. Yeah, I always try to give myself, I'm like, look, I'm gonna look at the clock when it hits hour 1, and then I'm gonna head closer to Penn Station, but we always just sort of get carried away. But yeah, so the only other thing which I think we did touch on a little bit is we really have to pay attention to this rally in Chinese equities and in Chinese stocks. So Alibaba had a really good day today. Ticker symbol BABA. Love the dog. 10 out of 10 for the dog with the jacket. Ticker symbol JD. had a very good day today. And also Pinduoduo, ticker symbol PDD. Now, these stocks are extremely historically extended to the downside after that massive liquidation event across the board in the Chinese stock market. So if you look at HSI, ticker symbol HSI, I posted on my Twitter feed a monthly view or a monthly chart of the HSI, right, with some commentary there. So if you want to check that out, you could follow at Walks Wall Street on Twitter, and notice every single time that the HSI bottoms, it's always after these massive waterfall type sell-offs of about 45 to 56%. And that's exactly what we saw in the Chinese equity market over the past 2 weeks. So we have now rallied from the lows in the HSI. We have now rallied all the way 25%, but we are now catching up to those major moving averages, which is usually like a mean reversion trade. But one of the things I do like to look for, this is a really nice hotel. I got to point this out. So this is the Peninsula Hotel right here on the corner of 5th Avenue. Very expensive, by the way, but very beautiful. Has anybody stayed in this hotel before? I've been in the lobby once. Okay, I'll tell you a quick story about this hotel. Not to get too sidetracked. So one of my first jobs in the city, I was a teenager, right? And I was working at a car rental company on the Upper West Side of Manhattan on 83rd Street between Amsterdam and Columbus. And there was a big time actor, and at the time I didn't even know who he was, but I'll tell you who he is later. But I didn't know who he was, so my friends were like, you got to give him a ride down to this place. So he rented a big Cadillac Escalade, but I had to give him a ride right to this Peninsula Hotel, and didn't know who he was. The guy was super nice to me the entire way when I was giving him a ride, probably because I wasn't harassing him and asking him so many questions. But supposedly, not supposedly, the actor was John Hamm. Anybody know the actor John Hamm? I still has never seen a movie that he's in, but he was a very nice guy, really nice to me, and he gave me $200. Kevin Sunderland, what's up, man? Good to see you. He says, hey, Tom, it's been a minute. Great to see you back in New York City. Think I'll wait for a recession to keep some dry powder ready to go. Kevin, thank you so much for the $10 donation, my friend. Hope you're well. Hope you're riding out the storm just like we all are. Yeah, I mean, look, I think, the Fed's going to continue to raise rates. What I'm looking for is new leadership, right? You look at the Amazons of the world, you look at the Microsofts, Alphabets. These are all still in stage 4 declines, right? Still in stage 4 declines. And usually when we emerge out of a major bear market like this, you really want to see new leadership. You really want to see new leadership. And as of right now, what's leading the market, unfortunately, is oil and gas and biotech. The two sectors I hate trading the most. So we'll see. But good to see you again, Kevin. Hopefully you're having a good one, my friend. And hopefully we see you back in New York very soon. Flea Bob says John Hamm was in Top Gun Maverick. Was he really? Yeah, Abdullah was Mad Men, I think. So this was, let me tell you what year this was. This was 2014 or 15. And here's the reason why at the time it was like a really big deal. So my coworkers were telling me about a month after I gave him a ride there, supposedly he took that, I can't go in too far, but yeah, I guess that's the only real celebrity that I've really met here. But so this is the St. Regis Hotel here. Another beautiful hotel. I think this is also another 5-star hotel here on 5th Avenue. Now, if we keep going uptown, which unfortunately we can't do today, you're gonna hit into the Plaza Hotel, which is another very iconic hotel here in the city. Oh, was he really on SNL back in the day? I didn't know that. Very cool. Yeah, Joseph Hardaway says they need to retire the term FANG stocks. You know, I think it's interesting, and this is why it's so important to look at historical norms in the stock market, right? Because just because a stock was a market leader doesn't mean it will always continue to be the stock market leader. Like, what did we just talk about at the very, very beginning of the stream? Really quick, hold that thought. This is Carlton Fine Arts. Very, very beautiful gallery here. Definitely a big contrast from the very dark and dreary street of Fifth Avenue. I mean, this thing is lit up in all white. It kind of gives me a sort of like a Wynwood, Miami, Florida sort of feeling. Very cool pieces here. Now, we talked about in the very, very beginning of the stream, one of the all-time stock market leaders. So one of the all-time stocks that had the greatest performance was Tandy Corporation, right? And now, well, Tandy formerly, well, now known as Radio Shack, it's not even in business anymore. So there's no guarantee. Just because, you know, Amazon is Amazon and Alphabet, Google, Microsoft, you get the picture. It doesn't mean that there's not going to be more entrepreneurial companies that come in here and steal the show. You know, just look at all of the different, I would say, look at the S&P 500 in the 1970s, in the 1980s, and in the 1990s. The top 10 stocks within those indices are very, very different than they are right now. Very different. This is a pretty nice display. This is Coach. I think they did a pretty good job. Roberts' Tandy computers were great back in the day. Wow, Brad Sprain says I met Curly Neal and Dan Rather at the airports. I'm not sure who Curly Neal is, but I do know who Dan Rather is. Yeah, Michael Joseph says S&P more and more tech now. And I think that's why you're seeing a crazy anomaly here. Ooh, hold that thought, everybody. I almost forgot to show you guys one of the most beautiful New York City landmarks right here on Fifth Avenue. This is St. Thomas Church. Take a look at that architecture, beautiful. Hey, Ross, is Tom. I still have a Radio Shack TAD telephone answering device. Wow. You know, St. Patrick's Cathedral is more of a tourist attraction, so more people tend to want to see St. Patrick's, which is a great cathedral. I love it. But I don't know. I think I'm a bigger fan of the architecture at St. Thomas Church. I think it's just very unique in its own way. But they're both fantastic establishments. If you haven't been here, it's East 53rd and 5th Avenue. If you keep walking down 53rd, I think you'll hit into Jeffries. Brad's Brain says, Tom, Curl Neal was a Harlem Globetrotter, super famous when I was a kid. Wow, that's awesome. I never heard of him. Once I get on the Long Island Railroad, I'll try to look up some YouTube clips, maybe of him playing or something. Mimi says, I like Radio Shack carrying electronic components / parts. Brian Forrest is here. Good to see you, Brian. Now, hold that thought. D. Ferrito 530. Thank you so much for the $10 donation. You are very, very kind. I appreciate it. Says, hey man, it may sound weird, but I'm a self-employed investor / day trader, and I'd love to come out and network with you and talk economics. Yeah, for sure. I think that's awesome, man. You know what you could do? If you click the link in this description, that will bring you to our Discord chat. Now, I haven't been in the Discord chat in a minute because you guys are gonna get a kick out of this. I broke my work computer, so my work computer finally conked out, and I forgot the password to my own Discord server. So I'm working on that. I got a new computer, but until I can remember the password to join my own server, I'm out of luck. But please join it. We sometimes put some very useful information there. So we'd love to have you. And thank you for joining, and thank you for the donation. I would love the network. That's one of the main benefits of this live stream. It tends to attract people that either work in finance or work in tech or in real estate, really all over, right? So absolutely, thank you so much, and I'm 100% open to a network. Hey, Roxanne Robles, what's up? Hey, Roxanne, good to see you. Thanks for being here. Well, we almost forgot to look at the Cartier building. Now, this building is my absolute favorite, and I'll tell you why. During the holiday season, it's always lit up in just the classic white. I don't know, I think in my view, the buildings look better, or the Christmas lights look a little bit more, I don't know, maybe professional when it's a classic white. What do you guys think? Any takes on that? Agree, disagree? I think a classic white is a little bit nicer. So I give their Christmas display an 8 out of 10 this year because usually there's a massive, I don't want to say lion. What is it, everybody? What is the Cartier logo? Is it a mountain lion, something like that? I don't know. But there's usually a huge one on the side of the building, but it's not there this year. But it's still a good display. Still a pretty good display. All right, onward down. We still got a lot of ground to cover. Cayenne Pacific, thank you so much. Dr. Longus says you love the white too. Yeah, I think it just makes it more of a New York sort of classic feel. I'm not a big fan of the tricolor lights. I don't know, just not a big fan. Oh, Leda, I think you're right, it's a panther. You're correct. It is a panther. So Brad's brain, the only sort of news commentator that I've met in person, but I didn't even say hi to him. I don't usually like doing that stuff. If I see like a notable person, like a celebrity, I will never go up to them and say hi, just because their lives are already suffocated by people saying hello and taking pictures and stuff. Anyway, so David Faber, I ran into David Faber on Park Avenue. I just walked past him. I think he was coming out of the 430 Park Avenue building, which is where I work out of sometimes, at WeWork. But I don't know, I'm a big fan of David Faber. I think he does a good job on CNBC. Also, Carl Quintanilla. I haven't seen him in person, but I think he does a good job. Yeah, Michael Joseph says, yeah, he's a good guy. See, the reason why I like David Faber is because he's like a no nonsense, like no BS. It's not like he doesn't placate. He just gives you the freaking news. That's what I like. So this is Saks Fifth Avenue. Yeah, I agree. Michael Joseph, he's good with straightforward reporting, 100%. So we'll try to cross here. And this is Rockefeller Center. You guys will be able to see the main Christmas tree here. But across the street is Saks Fifth Avenue, where they're just starting to put up all of the holiday decorations. Wow, we're getting a behind the scenes look here at the holiday decorations of Saks Fifth Avenue. Pretty good. I think they're doing their testing. Hey, Charlie Richardson. What's up, my friend? Good to see you. All right, I'm losing track of time here, my friends. But it's been a fun stream. But I'll take you guys with me to Moynihan train station. After 2 hours, the stream is called Walks in Wall Street After Hours. Very seldom does it happen, but when it does, it gets to be crazy. So hold on to your hats. So here we are at the Rockefeller Center ice rink. We got the Zamboni doing a good job there. They did a fantastic job this year with all the setup decorations. All right, let's continue down. Yeah, Stephen Bates, like, it's cool to see the contractors putting up the lights. You know, what they're doing last night and I think tonight, obviously, they're decorating the brand new Moynihan train station. So let me see if I could take you guys in there. Usually the internet is no good, but I was in there late last night and they were just starting to set up all the stuff. So this is the famous Rockefeller Center Christmas tree. Unfortunately, there is a bunch of scaffolding on it, but that is because they are putting the lights on the tree. And then they will be doing the lighting. You know, I wonder how long this ice rink stays open, because it looks like the people are coming back on the rink. Ryan Royal, good to see you, my friend. All right, we got to really put the pep in the step now. Hey, Day's Work, what's up? You're still the Wall Street skate, bro. Yeah, if we could ever get the skateboard back, I'm down. I think it may be a little bit too cold now. All right, so we are now passing the FAO Schwartz building. And when I was a kid, FAO Schwartz actually used to be right outside the Apple Store. Any New Yorkers remember that? So where the Apple Store is right now on Fifth Avenue, that's where the FAO Schwartz used to be. Not anymore, they moved it here. I should just make my train, so we'll see. Oh, there was one other thing I wanted to say. Did anybody see the interview with Ken Griffin, the CEO of Citadel Securities, on Bloomberg? the other day. Anybody see that? Now, it's interesting what he warned about specifically as it relates to China and the semiconductor sector. Because specifically, we've been talking about the same thing on the channel, right? Now, this goes way, way back when the Biden administration passed that Chips and Science Act. Does anybody remember that? And to be fair, right? Obviously, I think everybody knows I'm not the biggest fan of the Biden administration and Joe Biden, but I think I do tend to be fair. I think I tend to be fair. And I try not to let my political bias cloud when somebody does something good or bad. So, long story short, I like the fact that the Biden administration said that the semiconductor shortage specifically and the outsourcing of semiconductor manufacturing is a national security threat. I agree, and I think that they were spot on. And I actually agree with a lot that's in that Chips and Science Act. And Ken Griffin sort of reinforced that point of having China having so many advancements in technology and in semiconductor manufacturing and fabrication being a national security threat to the United States. So I wanted to do a deep dive into that. We're pushing hour 3 here on the stream, so we will we'll talk about that later. But there was a lot in that interview that I think needs to be unpacked. But did anybody watch that? Ralph, good to see you. Hey, the ABX girl, have a good one, my friend. Hey, DM is here. Good to see you. Yeah, Brad's Brain, have a good night, my friend. I don't know why we went so far over tonight. I just got lost in space here. But I got to get home too, my friend. I think I'm going to miss my train. I think this may be the first time. But we'll cover that, I promise, on tomorrow night's stream. All right, 42nd Street, so we got to put a little bit of pep in the step. Line Sync, good to see you. I'll take you guys with me, but if you enjoyed the stream tonight, feel free to hit the like button and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we'd love for you guys to join us.
See, that's some bullshit.
But I will be walking a little bit faster, so I may miss some of your comments. Somebody says, I'm feeling a 24-hour stream tonight. No way, no way. Gotta get home. I think I'll make it. I've always made it. Van, thank you for joining. Appreciate you, my friend. We'll see you tomorrow. Now, I am interested to see. I'm watching this massive snowstorm that's supposedly supposed to slam right into Buffalo. Now, I couldn't even imagine 70 inches of snow. I mean, I don't even know how you operate in that environment. But on top of that, it's supposed to fall in the span of 24 hours. It's insane. Yeah, KM Ramsey, yeah. Well, we could be in Buffalo. Oh, Ollie Stars in Buffalo, okay. Be safe. Liz says, love the snow, but glad I left Buffalo. I know, this is the lake effect snow is unbelievable. So lake effect snow generates in what? The Great Lakes and the Finger Lakes? And I think the bad thing about that style, I would say, of snow is it's so heavy, right? Very heavy, very wet snow. Fred X is Tom's bullish on the Finger Lakes region. Long term, I am, yes. If I could buy land there, I totally would. Because I think the biggest commodity, or the most precious thing going into the rest of this century and next, is going to be fresh water. And the Finger Lakes region of New York has some of the cleanest water in the entire world. Not only the United States, but the world. Could we get a quick time check in the chat? Just want to make sure I am keeping tabs here. Yeah, love is kind, says I could never handle that kind of snow. 11:08. I think I may just make it as the doors of the train are closing. Look at these guys. They're cleaning the big LCD screen thing. You know what I'm going to start doing from now on, I think? I think from now on I'm going to do the streams wearing a mask. No, not because of the big C, but because it is so cold. And it keeps me warm. I think I'm gonna start doing that. I get like a ski mask. Because this is only the beginning. It's only gonna get colder from here. All right, Broadway. Headed downtown. Jeff, what's up? The short guy says as long as you get an actual ski mask. NMB045 says I agree, it helps me keep warm in negative 30 degrees Celsius Montreal weather. Wow. Negative 30 degrees Celsius. Now, it very rarely gets that cold here, but that's frigid. Outer Haven, Long Island, New York. Wendy England is getting an electric vest. Well, tonight I'm rocking the classic Patagonia vest. And, what do you call it? A jacket over it. It's actually not too bad. It's actually not bad at all. Ooh, Jeff says, I love the cold weather for running. You know, I'm not a big fan of running in cold weather. for some reason, and I used to train for really, really big races back during my college soccer days. You know, for preseason, we would run, I mean, my God, 50, 60 miles a week to train. And I would hate training in the winter because my throat burns. It burns. It's so cold, it burns. All right, we're getting there. West 39th Street and Broadway, headed downtown. Ooh, Keith. This is which borough is the coldest? Well, I'll tell you this. I worked in Lower Manhattan. I used to work in Lower Manhattan. I told this story a million times, but I'll tell it again. And Wall Street and South Street Seaport, Water Street, in my view, is by far the most frigid cold you will ever experience in New York. It is brutal down there. And I think a lot of people make the mistake of visiting South Street Seaport, Water Street in the summer and in the spring when it's really nice. So they get apartments down there, but it's almost, in my opinion, it's almost uninhabitable in the winter. It's so windy and so cold down there. It's like insane. I used to take the 5:35, like 5:30, 5:20 train from Massapequa to Penn Station, then the 2 train from Penn Station to Wall Street. I would get to the office, it's pitch black, it's freezing, and then you leave the office, it's pitch black and it's freezing. Dusty Cole, what's up? Good to see you, brother. Andreas, good to see us. Is everything by the water is freezing? True. Michael says the skyscrapers block the wind. Well, the problem is, down in Lower Manhattan, the buildings are closer together, or at least it appears that way. So it creates these ridiculous wind tunnels. I remember getting off of the subway on Wall Street, the 2 train, and just the wind is so cutting. It just like slices right through you. It's crazy. Hey, we have our viewers from Japan, which I think makes sense because we're going well over time. So good to see everybody from Japan. Hopefully you're well. Thanks for joining. Oh, who said that? Let me see. Yeah, Michael Joseph says the wind tunnel in Staten Island Ferry is nuts. It's so true. Brutal. MSK. Beacon, New York says, Tom, the Moynihan train haul takes you to Canada with the Amtrak, although Montreal service is still suspended. Yeah, I think that's what I was originally going to do. Take the Amtrak train to Canada in 2020, but then obviously COVID. We all know what happened with that. James Tropicals is here. Good to see you, James. Welcome. All right, team, what I think we'll do is what are we gonna do? We'll end the stream outside of Macy's because I think I gotta put a little bit of extra pep in my step, and I don't want to shake you guys around and cause you to be dizzy. So we will end it here. Long stream, but we covered a lot. We covered a lot on the stream. We talked about inflation rates in the UK. The United Kingdom hit all-time record highs for inflation rates. The CPI print came in at 11.1%. We talked about the PPI and the CPI rate in the United States. We also talked about Palo Alto Networks reporting earnings today. beating on both the top and the bottom line. And then we talked about some housing data. So if you guys enjoyed it, feel free to leave a like on the video. Hit the subscribe button if you're new. If you want to sign up for our free investing newsletter where I write about the US equity markets, emerging markets, fixed income, and real estate, feel free to scan the QR code on your screen and punch in your email address, and you will be able to receive it for free. It's a great way for all of us to stay connected while we're not streaming. So everybody, we'll see you tomorrow, 8:30 p.m. Eastern time. Line Sync, thank you so much. Line Sync, yeah, all-time highs since, you get what I mean, 12-month basis. Layda, thank you so much. Brandy, appreciate it. Sam Mangano, Cindy Foley, Abdullah, out and about. Cindy Foley, thank you so much. FredX, Layda, love is kind. Lisa, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. I will see everybody right back here tomorrow. Thanks so much. Tony, also, thank you, appreciate it.